Just talk to us about the market and how it's performed. Still above 4,000. Some just say it's relatively flat. It's been trading sideways, losing 9 points, 14 points thereabouts.
Yes, and you expect that to go on for a while until perhaps maybe banks give their first quarters, and that will probably give some indication as to the direction of how things will pan out maybe for the whole year. We've got a couple of headwinds. We talk about inflation, we talk about government expenditure, so no one knows how things will pan out from that front. And of course, the last year's economic growth numbers are talking about 6%. So we've got all these factors that people are still trying to make sense of, and that will drive the stocks up, sideways for a while.
All right, obviously some jitters, as you're suggesting, creeping in due to heightened inflation at 9.2%. Investors not really sure what kind of action we're going to see from the central bank, definitely tightening, but how much? So with people not sure what interest rates are likely to do, we're starting to see investors moving into short tenure bonds. 3-month bonds are the ones that seem to be doing better than any other. Explain the phenomenon.
Well, everybody wants to protect themselves from duration risks, but at the same time try to get themselves some yield at the same time. If you look at interbank interest rates right now, they spiked a couple of weeks ago. They even exceeded the 91-day T-bill rate. So that tells you there's quite a bit of jitteriness in the money markets, and because banks are one of the largest players, especially in the short end of the yield curve. They're taking positions to protect their wealth, and that is no more than we expected.
I mean, what bearing is this likely to have on government's ability to raise finance? Because there are huge and very ambitious infrastructure plans by the Kenyan government, Vision 2030, but rising yields, rising interest rates effectively puts pressure on the government just by way of the higher cost to raise some of these funds.
That is true, but on the flip side, they're looking to change the way they auction bonds. They're looking to bring in primary, I forget the term, but you're looking to bring in people who will, institutions that will ensure full uptake of bonds and then later on float in the market. And the government believes that will secure a lower yield for them. Lower interest rates for them. So, but there's still quite a bit in terms of inflation. We believe this month will probably be higher. Fuel rates have jumped through the roof, and there's no sign of them stopping, both here locally and internationally. So there's quite a bit of headwinds in the inflation front.
I mean, obviously there are some concerns also about a depreciating currency in the context of rising inflation and the fact that Kenya is a net importer of fuel, so it's likely to have a direct impact on the current account. What are we likely to see just by way of the exchange rate for the shilling and the dollar? And are we likely to see the CBK continue to enter the market to defend the Kenyan shilling?
Well, we think that the most sustainable way to defend the shilling is to raise interest rates, and they probably need to raise them sharply to mop up some of their currency from the market. Because once inflation cut is out of the bag, it becomes very difficult to control. If they want to come in and buy to flood dollars in the market, it might be tricky because they only have so much. But tightening money supply is the best and most sustainable method, we think, and that's what we expect them to do, because it does two things: it controls inflation, and on one hand, and on the other hand, it also manages the exchange rate. And the controlling of inflation, of course, is through management of the exchange rate. So we hope that's the route they'll take. There'll be economic pain, of course, but we think that's the only sustainable route right now.
All right, let's move away from forex and fixed income and talk about what's happened on the equity side. Results coming through full year for Kenya Reinsurance, profit growth of 16%. Are you impressed?
They did well on the premium side, but we hope to see a bit more on the investment side, because if you look at other listed insurance companies like Jubilee and Pan-Afric, and the banks as well. They did really well in their investment income, and we expected to see the same with Kenya Re. But overall, the growth was probably a bit lower than what they should have done over the year. Yeah. But we're happy that at least they're giving a return.
Market movers today: Portland Cement, CMC gaining 2.51%. Pan Africa, as you suggested, doing really well, gaining 2.17% on the share price today. Any views on some of these gainers?
Well, of course, some of those counters have bonus issues riding on them. That's exciting the market. Pan Africa did really well over 2010. Portland Cement looked a bit cheap. The multiples trading were a bit low compared to its peers. But of course, there's always the threat of the market share, especially with regard to the cement industry, where you've got new players coming in with huge capacities, existing players also expanding their capacity as well. But Portland excites one, especially because they're moving from electricity using heating oil to coal, so that should help them control their costs a bit. But we don't know how the outlook is for the building and construction industry, because it has been a driver for growth for a while. But we want to take on a bit of caution from this point on, because it might not be sustainable given the movement in interest rates.